Good evening everybody, and welcome back to episode 65 of Open Crypto, where we keep you informed on a bi-daily basis. If you are interested in keeping fully up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. So the story of the evening is Canada places ban on margin and leverage crypto trading. This is an article by Olivia Brooke, and it's by Z Crypto or Zy Crypto or Easy Crypto. I'm not sure how to pronounce that. I've never heard of this website before. So let's get straight into it. Following the downfall of FTX, different countries are looking to tighten their policies, specifically for digital currencies, in an attempt to safeguard investor funds. Key investors at risk following the new development. It appears that Canada is taking this path, as it recently took steps towards restructuring its regulations by placing a ban on margin and leverage trading for digital currencies. For anyone who doesn't know what margin trading or leverage trading is, it's a type of trading where you use what's called leverage, and leverage is basically debt. So you can deposit $100 into an exchange if you would like to trade, and you can just buy what's called spot. So I could buy just normal Bitcoin, would be the underlying asset. It could be Bitcoin, could be ETH, it could be gold, it could be, talking paper gold, it could be anything. And that'll go up and it'll go down based on what happens next. And there's no risk of me being liquidated, my position being liquidated in that instance. I basically lose money if it goes down, and I make money if it goes up. This is if it's a long position, obviously. Now, what I can also do is the exchange will say to me, okay, that's fine, you can trade spot, but if you want, you can use that $100 and you can leverage that up and use, say, 3 times leverage. In crypto, it goes up to 100x leverage, which is crazy. But you've got 1 times, 3 times, 5 times, 10x leverage. But let's say you decide to go for something what's actually quite conservative in the crypto world, but it would be aggressive in the traditional world, and you go for 3x leverage. So you're going to use 3 times your leverage. So you put $100 in, and you're going to get 3 times that. The exchange will lend you that amount. So you'll have now a notional position of 3 times the amount of your deposit, whatever it is you deposit. So in this case, it's $100. Now what that means is now that if the price goes up, you now have a bigger notional position because the exchanges loaned you the money. And so if you go up by 1%, if the real spot price goes up by 1%, the underlying asset, you actually go up by 3% because you've got a bigger position on in reality. Now, and that's great if you're right and it does go up, but if it goes down, and this equally works just as bad as if you were shorting something and it goes up. If you've shorted it, then obviously you're in trouble. So if it goes down though by 1%, you will lose 3%. And so leverage can get you in trouble very quickly, but you can also make a lot of money doing it very quickly with a small amount of collateral. With a small, you can turn $100 into, if you use 10x leverage, I can turn that into $1,000 position now, and I've only put in $100 of my own money. Now, it's not just that. So if I lose, I'm obviously going to lose three times my money if I get the position wrong, if I get the call wrong. But also, if I get it really wrong and it goes down by, and you'll have these agreed rate, you'll have an agreed liquidating position before you'll know this before you put the trade on. Well, hopefully you will. It wouldn't be very smart to put a leverage trade on without knowing what your liquidation price is. But if it goes down by, say, 10%, for example, in this, you will get liquidated. Your position will you'll either get a margin call in traditional financial world. We do call it margin trading, but it's not very as popular as leverage trading is in crypto. But you'll get a call in the traditional world from the exchange or from the broker, and they'll say, have you got some more money to throw at this? If not, we're going to liquidate your position, and that basically means you're out. They take your money. The exchange it has to sell what you've got because it can't pay for it needs to pay for the money that it's lent you because you got it wrong. So it can be really dangerous because so it's not only a case of you just can lose some money here, you can lose everything if you get it really wrong. And crypto is very volatile, so you can lose it. I mean, leverage trading is dangerous, or can be dangerous, if you don't know what you're doing in the traditional world, just trading something stable like gold. But if you get it wrong in crypto, it's not a forgiving a forgiving sector to be wrong in. So this is one of the reasons why crypto, so you can imagine why crypto is so volatile, is that it attracts a lot of leverage, it attracts a lot of inexperienced traders that love to leverage trade, and when they get it wrong, they get liquidated. And it's not as simple as, oh, you just lose your money. It has to sell the assets, and so what that does is it puts sell pressure on that asset, which obviously pushes the price down. If you've got large liquidation event where loads of people are getting liquidated all at the same time, that asset's being sold massively, and so when it gets sold, it obviously pushes the price down. So then it only adds to more liquidations from other people who had a lower price, who had a lower liquidation price, and it has a real domino effect. So it's really it can be really dangerous. Be careful when you leverage trade. If you like doing it, make sure you know what you're doing before you do it, because you can get in a lot of hot water quickly. Companies affiliated with cryptocurrency trading were informed about the recent development in an update made by the official organisation of Canada's provincial and territorial securities regulators, also known as the Canadian Securities Administration. Now, it's also important to note, so they're banning this type of trading that I'm telling you about, where you lend money against the exchange. The exchange loans you money. This also, I believe, is actually banned in the UK, so it's illegal to leverage trade or margin trade in the UK. I don't believe it is in Europe. In the update, it is made known that that's leverage trading on cryptocurrencies. You can leverage trade in normal stocks and shares. In the update, it is made known that a revaluation of existing requirements has taken place, leading to the conclusion that said requirements need to be expanded across all cryptocurrency platforms within the country. Excerpts from the update, as seen on the official securities regulator site, reads as follows. Custodians will generally be considered qualified if they are regulated by a financial regulator in Canada, the US, or a similar jurisdiction with a supervisory regime for conduct and financial regulation. The implementation process will be carried out by both the CSA and other crypto trading platforms. CSA members will contact registered crypto trading platforms individually to discuss the application of the expanded terms and conditions to those firms. The CSA will publish further details about this updated approach in the future. The move's effect on cryptocurrency trading platforms in Canada might include a decline in cryptocurrency trading activities over time. Cryptocurrency trading platforms operating in the country might need to halt the banned options in order to maintain the law. Larger investors are significantly at risk, as margin trading requires using borrowed capital in larger sums from a brokerage or exchange. Exchanges offering cryptocurrency trading might also record a loss in revenue as it shuts its doors to two of the most commonly used cryptocurrency trading methods. Canadian investors are also likely to record losses, as it is uncertain whether or not they would look elsewhere to continue their trading activities. And it's also important to note that this only affects centralized exchanges like what FTX was, like what Binance is, where you've got a CEO and there's a company behind it. I don't know how this is going to affect decentralized exchanges once we get leverage and margin trading. Once it properly takes off. I know there are a few outliers. There are a few going at the moment, but they're not very big. They're not very not trusted. I think the more experimental kind of the DeFi exchanges when it comes to leverage trading. I know there's spot exchanges where, like Uniswap and what's the other one? 1inch. They let you trade spot, and they're brilliant. They're really, really good. They're decentralized, so there's no company behind them. There's just code. You're just swapping your assets, your digital assets. So they're really good. And again, I don't know how you will regulate a decentralized one where it's just code, executing. How can you regulate that? There is nobody to follow. It doesn't exist. There's no company. It's like Bitcoin. There's no CEO behind Bitcoin. All DeFi is like that. So an interesting article. That's what I've got for you this evening. I do apologise for this video being late, but as many of you will know, it was the So remember everybody,